The repo hike. Who's affected? To your recent knowledge and development, the Reserve Bank of India has hiked the repo rate today on Wednesday. So to the ones who are shady with the definition, the repo rate is the rate at which banks borrow funds from the RBI, or one can say repo rate is the rate at which the central bank of a country, Reserve Bank of India, lends money to commercial banks in the event of any shortfall of funds. Repo rate is used by monetary authorities to control inflation. Any change in RBI's policy repo rate makes a direct impact on bank, lending and deposit interest rates. Interest rates on term loans such as houses, cars and personal are linked with the external benchmark, including the repo rate. When RBI's policy rate gets higher, this also leads to a higher cost of funds for banks. Hence, banks raise interest rates which ultimately hit your pocket as monthly installments. EMIs get costlier. Most banks have linked their lending rates to the RBI repo rate, and therefore the impact is immediate for the borrowers. The cost of borrowing for retail and other borrowers goes up after the repo rate is hiked. That is, the growth and profits of businesses will get affected, leading to falling share prices. The cost of funds for banks goes up when the repo rate is increased. In order to deepen credit flow to the housing sector, Das said that the cooperative banks will now be able to lend more for home loans. This will ensure better credit flow in the residential housing sector. To let you know that this hike comes on the back of a 40 basis point increase in repo rate, which was announced in an off-cycle policy move in May. The RBI governor outlined that the off-cycle move was necessitated as it didn't want to shock the markets with a higher rate increase. Let's take an example. Assuming a loan outstanding of Rs 35 lakh for a period of 10 years, a 0.9 percentage point increase in interest rate pushes the interest burden to almost 8%, keeping all the other factors constant. At 7.1% on a Rs 35 lakh, the EMI was Rs 40,818. The total interest paid over 10 years would be Rs 13.98 lakh. Now that the rate has increased by 90 basis points or 0.9 percentage points to 8% on a Rs 35 lakh loan amount spread over 10 years, the EMI would be Rs 42,465 and the interest paid would be Rs 15.96 lakh. Meanwhile, RBI upholded the country's inflation projection for the current fiscal to 6.7% from 5.7%. Chief Shaktikanta Das said that the recent spike in tomato prices would fuel food inflation. High global crude oil prices would also exert pressure on inflation. For more latest news and updates, stay tuned with Anynews.